for Options Insight. I'm Abigail Doolittle. Joining me today from the Stevo in Chicago is Alan Nuckman of Agora Financial. And Alan, great to have you as always. This is a rally this year that just won't stop. Is it the Fed or something else going on that I'm missing?
Well, I think it's a relief rally. You've seen the Fed taking out the rate hikes for 2019, so I think that's very much a positive. But we've been able to focus on fundamental facts here in an earnings season to get the markets off of politics and policy, and I think corporations are still doing extremely, extremely well.
Well, sticking with earnings have actually been revised down for the next 3 quarters. So if stocks trade off the corporate profit outlook, it is going in the wrong direction. So what do you think investors are seeing here that they like? Again, is it just the Fed, this sentiment shift we're seeing?
I think there are a number of positives, but obviously one of them is this earnings season. Our expectations were about an earnings growth rate of 10%. Let me say the word growth again, because I think people forget about that. That the earnings aren't slowing. It's just the growth rate is less in the future quarters. So we were expecting about 10%. We come out with about 13% for this quarter. So I think still going, very well there. But also, I think that the dollar stalling here at these levels is an important thing to keep an eye on, because that could be another catalyst for the markets to the upside.
Great point on earnings. Less bad than feared, and growth, double-digit growth, nothing to sneeze at. But, I really do want to pick up on that on the dollar, because the dollar now, over the last 13 sessions, up 11 of those sessions, up more than 1%.
Right.
It seems to have to do with the Fed, perhaps, because that actually, the Fed's dovish stance should not help the dollar. But some are saying that other central bankers will follow suit, similar to the New Zealand Central Bank recently, and that the dollar will look great. What do you think is going on there? And you do think it's going to stall?
Well, I think the dollar could stall here. It's very hard to strengthen if we're not raising rates. So let's see what happens. We're at a very, very important point. Now, yesterday we had the euro currency make new lows, but we did not see new highs in the dollar. So that's a very important point to make there. 97.50 on the dollar index is the midpoint of the last few years, where it's traded between 90 and 105. So that's a significant resistance up above. So my play today is based on the dollar not increasing, looking at the emerging markets, because they had suffered with this recent dollar strength that we've seen over the last couple of years.
Well, so your trade is on the EEM, which has been flirting with that 200-day moving average, really a nice recovery. But you're going all the way out to June. Why so far out?
Buying more time. Buy more time than you need. So I'm looking for something to happen. We've got a nice little bottom base in this ETF. If you look at EEM, we're above the midpoint. 40 has been the midpoint here for the last couple of years. Now, we rebounded and got above that. I'm looking at a $38 call, so it's a stock substitution strategy. 37.50 is the low, so I'm essentially buying down there at that low level. The 38 call for June, the break even on that is about $1 higher. And so we've got plenty of time for good things to happen. The delta on it's 80%, 4 months of time. And I think this will have a nice, healthy payoff as we look for EEM to extend if the dollar cannot strengthen at these levels.
Great to have you. Alan Nuckman of Agora Financial at the Stevo in Chicago and Options Insight. And I love your point. Growth is good.